Hello guys, how's it going? Today I want to talk about what is Bitcoin and maybe why it should be a part of your portfolio. So here is something that I showed a little bit on my last video. This is just a prototype website I built. And on one of these pages here it says, what is Bitcoin? Bitcoin was created by Satoshi Nakamoto, which is a pseudonymous person or team who outlined the technology in a 2008 white paper. So nobody truly knows who this Satoshi Nakamoto is. It's an appealingly simple concept. Bitcoin is a digital money that allows for secure peer-to-peer transactions on the internet. Bitcoin is often viewed as a store of value akin to digital gold, and it is used for various purposes, including online purchases and investments. Unlike services like Venmo and PayPal, Bitcoin is decentralized. Any two people anywhere in the world can send Bitcoin to each other without the involvement of a bank, government, or other institution. Bitcoin transactions do not require personal information. Instead, users interact using unique alphanumeric addresses. While transactions are transparent and publicly recorded, the identities of users are not directly tied to the transactions. Every transaction involving Bitcoin is tracked on the blockchain, which is similar to a bank's ledger or log of customers' funds going in and out of the bank. In simple terms, it's a record of every transaction ever made using Bitcoin. But unlike a bank's ledger, the Bitcoin blockchain is distributed across the entire network. No company, country, or other third party is in control of it, and anyone can become part of that network, i.e., by mining. Mining, basically all mining is, and I'm going to go into this in just a little bit, mining is just verifying transactions on the blockchain. All right, continuing. There will only ever be 21 million Bitcoin. This is digital money that cannot be inflated or manipulated in any way because it's backed by code. There will only ever be 21 million Bitcoin. You do not have to buy an entire Bitcoin. You can just buy a fraction if that's all you need. Bitcoin has gained widespread recognition and use over the years, becoming a global phenomenon with a large community of users, investors, and developers. It also serves as the foundation for thousands of other cryptocurrencies that share similar principles but often offer additional features or improvements, i.e., altcoins or meme coins. You see lots of them. This is a little bit more in depth right here. It's how to mine Bitcoin. It's not exactly necessary for the purposes of this video, but I'm just going to go into it a little bit. So with Bitcoin mining, it's like finding a hidden treasure in your backyard. Miners use special computers to find new Bitcoin, just basically graphics cards, and they're trying to solve a puzzle. So to find this treasure, they have to solve really, really tricky puzzles. It's like a game where the first one to solve the puzzle gets a prize. When a miner solves the puzzle, they get some bitcoins as a reward, just like finding a shiny coin. So a lot of times as well, people who are mining Bitcoin might be a group of people mining Bitcoin and they get a fractional reward of Bitcoin. And every 4 years, that reward actually gets cut in half, and that's called the halving event. And right now, as of today's recording, it's 3.125 Bitcoin for every block that you mine, your block reward. So do the math: 3.125 Bitcoin times whatever the price is at now. I mean, it's roughly 300,000, if not more. So Bitcoin uses a public ledger called the blockchain, which records all transactions. Each block in the blockchain contains a group of transactions. Transactions, when people send or receive Bitcoin, those transactions need to be confirmed. Miners use powerful computers to solve difficult math puzzles. This helps ensure that transactions are valid and secure. Once a miner solves a puzzle, they group verified transactions into a block. It sounds complicated. I know how it sounds, but trust me, just follow with me. The first miner to solve the puzzle gets to add their block to the Bitcoin blockchain, a public ledger, and is rewarded with new Bitcoins, which is that 3.125. The puzzles get harder over time to keep the process steady, ensuring that new Bitcoins are created at a predictable rate. So, in short, Bitcoin mining is how new Bitcoins are created and how transactions are confirmed and added to the blockchain. And then this section right here, it's a little bit more complicated, but I'll go into it briefly. Uh, so Bitcoin operates on a decentralized ledger called the blockchain, like we just talked about, and the blockchain consists of blocks that contain transaction data. Each block is linked to the previous one, forming a chain. This ensures the integrity and chronological order of transactions. Miners collect pending transactions from the Bitcoin network. These transactions are grouped into a block. Proof of work. To add this block to the puzzle, or to the blockchain, miners must solve a complex mathematical problem known as a hash puzzle. This process is called proof of work. And for those of you who don't know, hash is just a string of characters. So miners are solving for a string of characters, just random letters essentially. But it's not exactly random, and let me explain. So the hash function used is SHA-256, which converts transactional data into a fixed length string of characters. So that string of transaction data goes into SHA-256 and is what people end up solving for. But it's not just that, they also have to solve for the difficulty of the network, which is how many people are essentially mining. If there's more people mining on the network, the difficulty is going to be more. So there's the transaction data, it goes into SHA, comes out as this. And then mining difficulty, the difficulty gets adjusted every 2016 blocks. It's easier or harder depending on how many people are on the network, basically miners, how many miners are on the network. And every 10 minutes, a new block needs to be added to the blockchain, and that roughly changes depending on how many people are on the network. And like I talked about before, if there's, nowadays it's so difficult to actually mine and complete one of these that many individual miners join mining pools where they combine computational power and share rewards proportional to their contribution to solving blocks. So right now, this is um, a little bit outdated. I did this a little bit, um, I guess, right before the election here. But even when it was sitting at 69,000, that reward would be $215,000. And now we're trading right around 94,000. So do the math for that. So essentially, that's how the blockchain network works. It ensures that all participants agree on the current state of the blockchain, making it resistant to fraud and double spending. So that's just a little bit about how you actually get a Bitcoin. Uh, and then let me just go into this a little bit, the risks, because let's just not think this is all free money. We hear lots of stories about traders making enormous gains by buying the next big thing, but others aren't so lucky. Right now, we have a lot of people buying meme coins, buying a lot of just stuff that really doesn't have any value beyond its community hype. And this talks about what causes a loss. So, all of these things right here: risk management, emotional trading, not cutting your losses quickly, lack of a trading plan, ignoring market conditions, insufficient knowledge, trading against the trend, overtrading, and unrealistic expectations. Let me go back to another page here. This talks about purchasing it, because how do you actually buy Bitcoin? And it's actually very simple. There's cryptocurrency exchanges, so you can choose an exchange There's popular exchanges like Coinbase, Binance, Kraken, or Gemini. You create an account. It's all the same if you're making a Robinhood account or whatever for stocks. It's essentially the same thing, just slightly different exchanges, and it is more risky. I mean, when you have cryptocurrency that you're trading with, usually the drawdowns that you experience are very volatile. And when there's ups, there's downs. So you'd deposit your funds and then you'd go to the trading section and you'd buy Bitcoin. You could either do that with a limit order, a market order. There's a bunch of ways to do it, but that's essentially how most people would do it. Crypto markets are highly volatile, which means that while there is potential for financial gain, on the other hand, there is a potential loss that you can experience. So that's how you would buy. And you want to keep track of your investment regularly and stay informed about market trends and news. A lot of people often transfer their Bitcoin from the exchange to a fixed wallet because we did see in the past there were certain exchanges that have actually gone bankrupt and those people were not able to get their money back. I think it was FTX or something like that. One of those big exchanges had went under. I'm going to go over to this now. This is why traditional currencies have value, because this is an important topic to talk about. Why is Bitcoin a better currency than a traditional currency? And it says throughout history, many items have been used to exchange value, such as shells, beads, animal skins, and precious metals. In this respect, these items are regarded as money. Money doesn't have to be printed currency we are all familiar with. All it needs to be is a store of value. And we have a lot of these things right here when it comes to Bitcoin. Scarcity, there's only 21 million. Divisibility, well, currency should have many denominations. Well, with Bitcoin, you can buy any amount that you want and send any amount that you want. So it's got that. Acceptability, the intended audience must accept it. We're seeing that a lot now. We're having more people in this space now than ever. Durability, a long lifespan. Now that's something that we're still getting to. We're not fully there yet. But as we can see here, when we pop back to the chart, yes, we are experiencing a bit of a drawdown in the market right now from our all-time high. But we are still sitting very good, 94,000. If you would have just bought and held almost at any point in time other than just a few weeks ago, you'd be in profit. Timing the market is a really difficult thing to do. You have to consider this is like digital gold, and the supply is running out. You also look at this, U.S. inflation rates. So United States, they've been trying to get to 2% inflation, but just look at Bitcoin. We're not having an issue of inflation. We're having issue of appreciation. Look at the value of this thing over time. Just zoom out. Look how much we've grown as a currency here. And then you look back to this historical performance of the Bitcoin index, compound annual growth rate of 100%. So if you just hold every year, there's a average rate of return of 100%. What currency does that? Or even just investment. It's a great investment, just a store of value if you want to put it that way. What is traditional or fiat currency? Traditional or fiat currency is a form of money that is centralized, backed, and managed by a recognized government entity like the U.S. Federal Reserve. In 1971, the U.S. government ended the convertibility of the U.S. dollar into gold. So now we're not even on a gold standard anymore. The government is just printing money. It's not backed by anything anymore. At least with Bitcoin, it's backed by code. There will only ever be 21 million. And there's people mining it out there, big computers and networks. It's actually backed by something that it's scarce. And how many of those 21 million are gone? in transferred to wallets that no one ever knows the password to them. They're just gone forever, or it's just disappearing. There are pros of fiat currency because when it's managed by a good, strong government, fiat currency is generally stable. Fiat currency policy changes tend to reach consensus quickly due to centralization, blah, blah, blah. Basically, it's insured, it's easy to use, and many countries have enacted laws that can provide consumer protections against fraud or theft. But there's a lot of cons, like we just talked about. Fiat holders must share some control over their finances and privacy with a bank. You don't have that with Bitcoin. Unless someone knows what your string of hashes, your wallet, they don't know who owns the wallet. It doesn't just have your name on it when you're sending money on with Bitcoin. So it's a very anonymous thing, and also it's not backed by a government. You have something that's just backed by people around the world mining and keeping the network alive. So, anyways, guys, I pretty much looked at everything there is to look at. Inflation is usually identified as a sustained upward trend in the price of goods and services in an economy. It also corresponds to the economy's currency losing purchasing power. So over time, it takes more and more units of currency to buy a certain amount of goods and services as inflation continues. The prevalence of inflation in an economy affects individual consumers and businesses because it effectively makes money less valuable. In short, inflation reduces a consumer's purchasing power, making savings less valuable and delays retirement. Central banks around the world monitor inflation so that they can respond effectively. The U.S. Federal Reserve, for example, has a 2% inflation target. So that goes back to that consumer price index. What they're trying to keep inflation at is 2%. The Bitcoin halving event is crucial to controlling inflation within the Bitcoin ecosystem, and here's how it works. Each halving event cuts the mining reward in half. So every single year, that reward you get for mining a Bitcoin goes down, which makes it more scarce and more valuable. It's harder to get. So here you are with the total Bitcoin in existence and what's left to be mined. 94% have already been mined. So yeah, guys, let me know what you think about the video. Bitcoin is a superior currency that I think everybody should have in their portfolio right now. If you don't have even a little bit, you might be missing out on huge, huge gains. But yeah, guys, that's my two cents for today. If you like the video, drop a comment. Let me know what you think down in the comments. And that's it. Bye bye.